Mr. Dubhashi, good morning. Thank you for joining us. Now, you've reported a growth of 20% while profits were up 1.7%. What was the profit growth and what was the drivers for the quarter gone by?
I would like to put these results in perspective. So this quarter, Q1 FY20 quarter, has been definitely one of the more difficult quarters for the NBFC industry as such. There are no two ways about that, most definitely. What are the three difficulties that the industry has faced? Number one is liquidity. Number two is growth in the core sectors, growth in car growth or tractor growth or two-wheeler growth in the core sector. And last is certain news, rumors, etc. about some of the names, some downgrades, defaults, etc. happening. So it has been a threefold, bad news coming for the sector. So let us talk about each one of them and you will see our results in that perspective. The first is liquidity. In very short, we have been able to raise good amount of funds, diversify our borrowing to retail and to foreign, and most importantly keep our gaps positive and our maintain about 5,000 crores of liquid assets on our book. At the same time, the cost of funds has gone up only marginally by just about 6 basis points. So liquidity has been maintained well. Second, growth. Definitely the growth momentum in the rural market, housing market everywhere has been slower in the industry. We are happy to say that we have been able to maintain or even grow market share. Having said that, what we have ensured first is asset quality. Always maintained our asset quality best, and which can be seen from falling NPAs. Second is maintain margins, and then growth has been only a result. So we have not run after the growth. This is not the time to run after growth. Growth can come based on the strengths that you build in our business. Fundamental. There are times to go for growth. This is not the time to go for growth. This is a time to conserve your energy, to build muscle, and that's what we have done.
The three SPVs of IL&FS have turned green. Given this now is your total exposure to the stressed and the trouble assets?
The third most important thing are there are two names which were discussed for last 9 to 12 months. One was IL&FS, and we have been coming and talking about IL&FS every quarter. So you will remember that out of our 1800 crore exposure, about two projects of 180 crores or so were green and the rest was amber. We are very happy to say that because of our team's effort working closely with IL&FS, Government of India, now 5 out of 6 projects and close to 1700 crores out of 1800 crores of total exposure is becoming green, and we are hopeful that in near future the remaining 100 will also become green. So if you would remember, we had reversed 84 crores of income in the fourth quarter. We have reinstated that income in this quarter because now everything is green and money will start flowing. The entire due on these projects of the entire lending community, almost 3 times that money is already sitting in the escrow account. So there is absolutely no problem in receiving that money, and we will, so hence we have reversed the reversal, reinstated that income. As opposite to that, even though I will not be able to say the name in public, a particular housing finance company, which at one point of time was AAA and now rated default, having defaulted in the near past, we have an exposure of close to about 550 crores plus interest to the securities of this company. We have conservatively taken a provision of 50%, which is 284 crores on this entire exposure. We believe that this is a conservative view. We are closely associated with all the efforts going on in either with the banks to restructure the loans or attempts going on to sell the company. We believe that eventual loss, if it happens, will be far lower than this 50% provision that we have taken. But as always, conservatively, we have taken this provision.
Mr. Dubhashi, you have weathered a difficult environment. You've put to rest a lot of concerns as well in the markets regarding this quarter. But regarding IL&FS risks as well as DHFL, what do you want to tell your shareholders after the performance we've seen?
So as I said, we have taken, so IL&FS definitely we have, I can say that the issue is resolved, and the housing finance company, we have taken the provision. So the quarter's performance is to be seen from the context of how good the company is able to do in a very turbulent quarter. And that shows that we have the inherent strengths now to not only do well in a turbulent quarter, but take even a one-time hit and still show the profits of about 550 crores that we have shown. So the model we have built is a very, very durable and strong model. And as I said, yes, profit growth in the future will surely come once the overall industry starts turning and our growth also gets even better.
Now, your asset quality has improved 1.6% sequentially. What has led to this improvement? Which are the segments that, are overall doing better, and what the kind of asset quality trends we can see?
So, I can answer it in two different segments. So, in housing segments, our GNPA are pretty steady performance continuously. In rural, for the last 3 years, we have been showing a steady decrease, steady drop by doing again the basic things right. We are concentrated, instead of concentrating on GNPA, we are concentrated on good sourcing, we are concentrated on early defaults, made sure that our zero DPD continuously goes up. And by concentrating on early delinquency, slowly, the overall GNPA comes down. It squeezes. As you solve GNPA and concentrate on early delinquency, your, the roll forward into GNPA continuously comes down. And that, our rural book is now in that good space. On the wholesale side, what you will see is that there is a big reduction from the last year. And that has happened because the entire legacy portfolio which we had moved to a special team about 1.5 years back. And we are seeing the results of that. A concentrated effort on reducing this GS3 has led to that. So what we are doing actually, interestingly, is we are further focusing on our rural business, on our housing business, and within wholesale, we will be further focusing now on only our infra business. So our structured finance and DCM books, we are now putting them on defocused list, and by seeing the success of this special team in running down defocused businesses, solving GS3, etc., they will be running down this book also, and we are sure that they will be able to do this without any effect on P&L.
Right. Mr. Dubhashi, how is it that you see yourself benefiting from the transfer of the three cases, that is IL&FS, SPVs from amber to green category? Can we expect provisioning, write-backs in the coming quarters?
So IL&FS, we have not made any provisions. We were always sure that we don't have to take any principal provisions. So we had not made any provisions. We had deferred interest, if you would remember, in the fourth quarter of last year, which we have reinstated this quarter. So we expect IL&FS now to be a normal standard asset, our SPVs, and go on from there.
Right. So what is the type of exposure in the developer loan book, and what are the asset quality trends that you see there?
Okay. As I've always said, developer lending or real estate lending is not everybody's job. It's not an easy job, even in normal circumstances. Most definitely, the real estate industry has suffered, has gone through difficulties because of, first through demonetization, then RERA, then GST issues, and then finally lack of liquidity of financiers to the developer industry. So many areas, many issues have caused a severe slowdown and many projects being half completed or abandoned. Why do I say that it is not everybody's job? That you require to have that right DNA to do this. There are a few companies around which have the right DNA, and we, being a subsidiary of Larsen & Toubro Group, which is one of the largest constructor and also a developer of real estate, we believe that we have the right knowledge, the right chops to do this. So what is it? It's very simple, that you choose your developers right. you choose the projects right, and most importantly, your disbursement and your monitoring of projects should be very, very strictly done. You don't just give money to a developer and then sit in your office and hope for it to get back. So you make sure you are on the project, you make sure that the project is going well, progressing well. We are doing that. We concentrate mostly now on A and A plus category of developers. If you see this quarter, our almost 90% of our new disbursements are for completing our own projects. Very little is for any new development. That is where we will concentrate, completing our own projects, making sure that this exposure is run down well. The good thing there is large part is to construction funding. Also, almost 97% of our exposure, we are the sole funders. So we are not worried about somebody else, not being able to fund, and hence the project, slowing down.
I appreciate your time and thank you for joining us. Well, we are in that phase of the market where nobody frankly cares about good news. Look at